Hi everyone, welcome back to my channel Achieving Alpha and welcome back to another episode of post market analysis for today, that is 24th of March 2021. And I haven't been able to post this analysis since the last 2 days because I was not well, but yeah, from today onwards we will continue this and we'll try to post this every single day. So with that being said, let's continue. So today if you observe the market, so the bears were in total control and we saw some intense selling pressure. So let's have a look at the charts. So this is the intraday chart for Nifty, and here we can see that Nifty today has closed below the 50-day exponential moving average, which is not a very good sign. And the good part is that we have still closed above 14,500, but one closing below 14,450, and that will eventually lead us to 14,000 levels. So basically we can expect that although this gap hasn't been completely filled, but I think that this gap should act as a good support from here on, and that's what we should be observing. So let's have a look at Bank Nifty. So if I show you the daily chart of Bank Nifty, so again we can see that we have closed below the 50-day exponential moving average, and the bad part is that since 2 days we were taking support around this area, which was 33,360, or to be precisely let's count it 33,350, but today we have closed below that support, so that's not a very good sign. And in fact we have closed below 33,300, which is clearly demonstrating the selling pressure and the bearish momentum can continue from here on as well. Again here also this gap should act as a good support from here on, but again I think we'll eventually test 33,000 once, because we haven't tested that level yet, and that happens to be a really good support. We'll see why. So let's talk about the intraday charts for both of these indices. So first of all we are going to look at Bank Nifty. So again we observed a gap down of more than 200 points in the opening session, and from there on the selling pressure continued, as you can see. And again I tell this almost in all of my post market analysis sessions, but you again should observe that if you would have followed the 50 EMS strategy today also, you would have made some good money. Although according to that strategy you should not sell whenever there is a big gap down like this, but yeah, anyways, 50 EMA is one of the most important levels for both Nifty and Bank Nifty, and it is respected on both the time frames, such as 5 minutes and 15 minutes, so you should keep that in mind. So yeah, the selling pressure continued, and 33,665 was an important support, but eventually we broke that, and after that we went into a consolidation. And in the last hours of the market we can see that some immense selling pressure came, and basically this was, I think this up move was basically a trap for the people who had shorted, and people would have thought that from here on Bank Nifty would rally, but again we witnessed some immense selling pressure in the last minutes of the market. And there was a rumor that the Prime Minister Narendra Modi is going to address the nation today at 8 p.m, but eventually it was a false news, because last year exactly on this day, that is 24th of March 2020, PM Narendra Modi had announced a complete nationwide lockdown, and that led to panic in the markets, and you must have seen how the markets fell after that. So people were afraid, and I think this could be one of the potential reasons. And also the COVID cases in India are rising, and people are afraid that this could be the second wave, so that is another reason. We'll talk about some other reasons, but basically if you are an old follower, so 2 weeks prior to this date I had made a video on why I thought that the markets could be bearish from here on, and I explained in detail about the reasons and my hypothesis that why I felt so, and since then you can see that the markets have fallen pretty drastically. So those were all the factors that I discussed, and yeah, these are the important intraday levels which you can note and can help you in the upcoming trading sessions. So this is for Bank Nifty, and you can also note the same for Nifty. So Nifty also, again we opened a gap down of roughly about 100 points, and after that the selling pressure continued. Now 14,700 was a very important level, but unfortunately we even broke that, and again Nifty also we went into consolidation between 14,600 to 14,700, and towards the end of the day we again saw an immense selling pressure. And this candle, as you can see, the volume is also really big. So if you have a look at the volume, so there was some selling done in heavy volumes, and similar is the scenario for Bank Nifty. And I had even made a post during live market telling that Nifty and Bank Nifty could see weakness from here on, and also at one point Nifty futures was trading at a good discount of roughly about 20 points, so that was another factor which led to the fall. So this was the intraday charts, and now let's try to have a look at the index movers and basically which were the stocks that led to this fall. So you can see that in Nifty 50, almost all of the stocks were negative except for Asian Paints. Now Asian Paints was rising because of the fall in crude oil, but eventually you can see the selling pressure, and you can see that Reliance and ICICI Bank and basically bankings and financials were the one which were the most weak today, and they dragged the index down. That was about the index, and now let's have a look at the global cues. So one of the surprising things today was that in spite of positive global cues, our market was falling, and that is expected because when the global cues were falling, our market was rising because of the continuous inflow of money from FIIs, and I think that they have started booking the profits now. Another concern is the US 10-year bond yield. So at one point of the day, this went below 1.60, but this has again started to rise up, and eventually we'll see the effect on the US markets and therefore the other markets as well. So the bond yields are still a major concern for us, and surprisingly, it's a major concern for us more than the US markets. So our market reacts much more bearish to the rising bond yields rather than the US markets, which is kind of surprising, but yeah, that's how it is. And even European markets are witnessing some good selling pressure. So if you observe DAX carefully, so DAX is struggling to stay above 14600, and if we close below 14600 today, we can observe some good bearish move in the DAX in the next few days. And similarly, CSE is trading comfortably above 5900. So it did go below 5900 once in the day, but it has recovered from there. And FTSE is also struggling to stay above 6650. So that's another major concern that we have. The only good part is that Nasdaq and Dow are looking strong, but again, this rising bond yields could be one of the major concerns. So this was about the global cues. Now let's go to the next section, which is the stock pick for the day. So the stock pick for the day is going to be Hdfc Bank. So let me show you the chart of Hdfc Bank. And yeah, we can see that the stock has been witnessing a fall since some of the last trading sessions, and basically after making an all-time high of roughly about 1640, the stock has been falling since then. And it's a really good stock to keep in your portfolio, there is no doubt about that. But the stock, as you can see, made a high of 1636, and after that it is roughly available to you at a discount of roughly about 8 to 10%. So this is one of the best private banks, and the good part is that being the leader in the private banks industry, you can see that the stock is available at a PE ratio lesser than the sector PE, which is really great. So you can definitely consider long-term investment in this particular stock. In the last 1 year, the stock has almost doubled your capital, and the last 5 years, the stock has given you a really good returns of over 180%. That's really great. And even in long term, the stock has made you some really good money. So you can definitely consider investment in this stock for long term. If I show you the delivery data for HDFC Bank, so we'll see that. So today you will see that the smart investors have made good use of this fall, and the delivery percentage is over 50, which is really great. And even if I show you the delivery percentages for the last 2 weeks, you can see that on every single day the stock has observed a delivery of more than 40%, which is really great. And smart investors know that these are the stocks they should be keeping in their portfolio for long term, so that they can compound their money in the best possible way and in a safe manner. So definitely you can consider investment in HDFC Bank for long term, and it's a great pick. Before wrapping up this video, let's have a quick look at the option chain and try to infer what are the levels that we can expect in tomorrow's expiry. So as I mentioned earlier, that March is expected to be a volatile month for the markets, and that's what we have been witnessing. And there are certain cycles that markets follow, and generally this particular quarter is observed to be volatile in each year. So that is something that you should keep in mind. So yeah, coming back to the option chain. So one of the things to observe is that till last week, the highest open interest on the put side was at 14,500, and now it has been shifted to 14,000. So I would still say that 14,000 happens to be a really strong support for Nifty 50 from here on. But again, as I mentioned, that 14,450 is very important, and a closing below that level would clearly indicate that Nifty has become very much weak in the short term. But again, I think that 14,500 should hold, and we should observe a pullback, because we see that we still have an open interest of about 39 lakh contracts on this particular strike price. And surprisingly, even after the intense fall, only 7% of the people have unwinded their sold puts. So that is something which could be considered good. So people are still confident about 14,500, but the moment we start trading below 14,450, the people who have sold their puts here would start unwinding their longs, and that's when we can observe some long unwinding fall in Nifty. So we should keep that in mind. So 14,500 happens to be a strong support for tomorrow's expiry, and we should hold that. But again, a lot depends on the global cues and other factors as well. Specifically, the bond yields and the rising COVID cases in India are one of the factors which are driving panic in the markets. Let's have a look at the call side. So call side, again, you will see that on each multiple of 100, we have some heavy call writing. So you can see that at 14,700, 14,800, and the highest open interest still remains to be at 15,000. But I personally think that breaking 15,000 this time would be really difficult for Nifty. Let's have a look at the option chain for Bank Nifty. So again, Bank Nifty, as I mentioned, that 33,000 is expected to be a very strong support, and that's what we can see in the option chain as well, with almost about 1 million put contracts written at 33,000. And again, here also we have seen only a 2% long unwinding, so that's also considered a good news because people are still confident about 33,000 acting as a support. On the call side also, you will see that there is a huge open interest on each multiples of 500. So 33,500, you see that there are 7.6 lakh call options written at that particular strike price, and 34,000 now happens to be a really strong resistance. So I don't see a possibility of that breaking in tomorrow's expiry. But again, if you trade about 34,100, which happens to be a really strong resistance, because we have tested it like 4 or 5 times, but every time we have gone there, we have witnessed the sharp selling in Bank Nifty. But if at all we stay above 34,100, then we can see some short covering rally possible, and that can eventually drag us to 34,500. But the chances are pretty less, and I think that 34,000 is not going to break in tomorrow's expiry. But again, we'll have to wait and watch, because 1.2 million, 1.25 million contracts are a lot, and if at all this is increased further to 20 lakh contracts or 2 million contracts, then we can see some really strong resistance at 34,000 as well. So this was mostly about the option chain. So the broad range for expiry for tomorrow could be between 33,000 to 34,000. I know it sounds vague, but that's how it is, and that's what the data tells. So I hope you like this particular video. That is it for this video. And one more thing that I would like to suggest is that the IPO season is really hot, and there are a lot of IPOs in the markets. But you need to know the fact that the IPO listing is basically dependent a lot on how the market's behavior, or basically what the mood of the market is, which as of now is totally bearish. So even if you would have observed the listing of Anupam Rasayan IPO, that listed at a 6% discount than the IPO price. So if you are applying to IPOs, be aware of the fact that the markets are bearish in the short term, and that will heavily impact on how the IPO listing gains are. So yeah, that's it for this video then. Hope you like this particular video. If you did, please consider pressing the like button, and if you are new to this channel, subscribe here for more such content. Thank you so much for watching. Have a good day and take care. Bye bye.